Per usual, on this channel for educational purposes only and is not intended as financial advice. It's set up Sunday back to our regularly scheduled programming here. Got a big week. It is potentially one of Bitcoin's most important weeks as far as what could happen here with the ETFs and what could happen with flows down the line. Certainly not immediately. I'm sure we get some rush of money that's been waiting on the initial slug, and then it's going to be interesting to watch the flows throughout the week. Depending on who you are and why you're here, if you're focused on Bitcoin or if you're focused mainly on altcoins, I think all of us to some degree are involved in legacy, whether we want to be or not, just based on 401k and other stuff. We've gotten big enough on the crypto side that it's important to have some opinion of the legacy stuff. That's why I cover it every week. So relative to where we are here now at the beginning of the year with the ETF stuff, I wanted to just go over some things here. I'll talk about all this throughout the video, but just putting it all down, I think, is helpful. And then just giving it a bull or bear as far as what we expect going forward here for the week, for the quarter, for the month, however you want to think about it. Technicals for Bitcoin are still holding bullish. Seasonality is, we'll say, muted. It's not bearish, but it's not exactly screaming bullish. Q1, Q3 generally is not bullish. Q1, Q3 is generally flat. And as far as where we're at in the cycle, we don't usually see crazy bullishness much beyond where we're at now. So it's good that we've got market structure sort of resetting everything. Open interest to me is not sending off any alarm bells. Yes, it's elevated. You expect it to be elevated. We're coming into a news event. I don't think that's any surprise. And I really feel like the ETF isn't priced in. I'm trading it that way. I feel like people don't understand what's going on here. They still think it's bearish. It's the single most bullish event we've had for price in a very long time. You can say it's bearish for the network. You can say it's bearish for the survival of the species here. You can say Satoshi would hate it, but I don't know, right? At the end of the day, if we want money from the institutions, we need accessibility for them. This is it, okay? You can read Max Kaiser's timeline lately on Twitter, and he is very concerned, and that's fine. But if we want institutions to buy BTC, this is how it's going to be. The question in the ultra short term, as far as on the week, is this going to be a buy the rumor, sell the news, a buy the approval, sell the launch? Is it priced in? Is it crowded? I don't think it's priced in. I don't think it's crowded because, again, I think people still think it's not going to happen, which, okay, I could be super wrong here. And if you think it's not going to happen, trade it accordingly. Don't listen to me. I'm just telling you what I'm doing, right? And I think sentiment broadly is all over the map. I think there are people who think it's the end of days and it's absolutely good night on everything. And then there are people who are maybe more towards the common sense realm where we are going to see billions of dollars on the inflows. We've spent a decade building this macro story. We've continually popped up on the best performing lists every year. I mean, what else do you want, right? So I'm super bullish on ETF stuff. As far as alts have not had a good time recently. Now, I don't know if that's because they've just been super hot for all of Q4. They were basically just redlining it, just pedal to the metal. I don't know if we're seeing flight to quality. It certainly looks like we are based on the stablecoin prints, which should be super bullish, right? For alts, it doesn't look like that's where the stablecoin money is going. So that's a bit curious. And the timing in the cycle, we're also pre-halving. Historically, alts do best post-halving. So it's also a bit of a quandary why alts did as well as they did last quarter. I think it was a mix of down the most, up the worst towards the end of the year, as well as this flywheel effect from the ETF, the excitement around that. So yes, in a sense, we priced in the ETF for the people who are here and listening and believe it's going to happen and are paying attention. That is certainly not a majority of people, right? At least I don't think so. Looking at technicals for some of these alts, they look not great coming into this week. I'll talk about each of those, but the silver lining is there's still weekly edge-to-edge trades on all these alts. For the week, I won't show any of those charts today. I'll save that for the altcoin video, but take these pullbacks as a gift, as a blessing, because ultimately you've either played the Q4 stuff and taken some profits, or you've played the Q4 stuff and maybe wished you had more. Sure, there's some people who probably are underwater from the top at this point. But on balance, I don't think that's too many people. And then there's ETH, which just needs time. We've got everybody and their mother sending ETH to every single exchange imaginable, or every single wallet imaginable, every defunct company exchange from last cycle still selling. And maybe the worst part about all of this is everyone knows what's going on, so it's super obvious. And you want to talk about EMH type stuff in informed public, just let it sell off, right? Who cares? Let the companies sell, let the companies distribute to the users and let it happen, and then revisit in Q2, right? Or later, I don't know. But certainly doesn't look bullish for ETH. And as far as distributions are concerned on the BTC side, yes, we've got Gox coins. I think that's going to be a giant nothing burger. The market's going to react anyway. The bigger thing is the GBTC coins, 634,000 BTC. We'll see what happens on week one. That's going to be relative to fees and all the products. And that's another game theory entirely. Then we have Legacy, which has mostly been a tailwind for us because of liquidity. We've been draining the reverse repo. We've been issuing short-term T-bills instead of long-term. We've had this slush fund to drain, which is great, but that's slowly coming to an end here and probably runs out in Q1. I'll talk about this more tomorrow, but there's been some chatter from some of the Fed governors, Lori Logan. I don't know if she's a governor, but she's on the Fed, kind of talking about whether or not they continue QT at the current pace. They're doing all sorts of stuff, right? They're bringing rates down. They're running this QT program, but we're still issuing tons and tons of debt. So it's really hard to offset that. And if we say enough's enough on the tightening side, do we want to continue QT at the current pace is the question they're asking. Now, they can't come out and say, we're going to stop QT and start QE again. They can't come out and say that. Market would go insane. So you kind of have to, drip it in, float it. Hey guys, what about just, going a little slower on the QT side of things? Technicals, I'd say, look good across the board for indices. Just like alts, they ran super hot towards the end of the year. Of the Mag 7, I think Amazon to me still looks the best. Apple is in all sorts of trouble. So that one's super bearish, and it's a big part of the index. It's a big part of most people's portfolio, whether they know it or not. So that's kind of an issue broadly. And something else that's quietly been happening is global indices. If you just flip through a bunch of different countries, most of them are at or near all-time highs as well. And I think what's going to happen in Q1, assuming we don't fall off the table for other macro reasons, the indices in the US are going to reset and continue to attempt all-time high continuation type behaviors. We do have a CPI coming up this week. It will be a higher month-over-month print. The market will flip out even though that information is known, and it's just a question of how much are we going to sell off. And back to the ETF, how does that work, right? We know we're getting some sort of announcement this week on the ETF front. Is it going to be at the end of the day on the 12th? Is it going to be at the beginning of the day on the 11th? I don't know. So we kind of have to dodge an angry legacy market because of a CPI print and still be able to have our little mini party on the Bitcoin side. We still have an inverted yield curve, no recession yet, and we still have unemployment that looks fine. So the numbers are the numbers. I don't care what your feelings are about them. The numbers look fine. They don't look like we're in a recession, and then we don't have an FOMC until the end of the month. So long, medium, and short term, if you are the hodler and the coldler, the hodl in the coldle, hodl in the coldware wallet, cold storage, hardware wallet. You don't really care about any of this. This is all whatever. I think most people have, hopefully, something in a hardware wallet that they don't touch. I think most other people as a group are probably in this medium-term camp, kind of playing a mix of legacy and crypto. Most of retail probably isn't allocated to BTC, which is another reason why I think they're going to be surprised when price goes higher here. But there are always other things you could do. There's BitO options, which is the future stuff. I've been dabbling in the BitX place, but if you think this is going to be bearish and you want legacy exposure, there's BIDI, that's the inverse ETF. And maybe you've got some mix of asks and bids sort of preset based on technicals. I'll talk about that in a second. Then there's these other people, which I just don't understand. They are alt-denominated, alt-allocated, or cash or stables. They're waiting for the news and the breakout. I just think this is not where you want to be living as a majority of your portfolio. I've seen more people get carted out with a toe tag playing the market this way. So I tend to avoid those behaviors myself. But one such avenue is you could play the breakout long above 44, short above below 42. And just keep in mind, exchanges are probably going to go down. You're going to get circuit breakers on legacy. You're going to have a super congested blockchain DEX environment. So, plan accordingly for all that stuff. You don't want to be in the position where you need to add the collateral to a leveraged trade and you can't because the network's just congested, right? I guess something else to think about on the alt side is, does this flight to quality continue to Bitcoin? Or is Bitcoin being held up by the ETF catalyst expectation? Or, is everything just bearish and I'm just blind to it? That could be, but I doubt it. I just don't know how well alts will do on news for Bitcoin. That's all. A lot of people are talking about ETH, ETF. Yeah, that's like millennia from now based on this week's time frame. All right, let's get to some charts. Here's a list of all the filers and the fees and whatever else. This is all going to get filled in this week. There's going to be more forms being filled out this week, more seed commitments. Yes, the custodians are concerning in that there's only mainly one of them. Okay. But we're getting closer, most definitely. As James over at Bloomberg says, we'll see approvals on those filings, then we'll see more documents. And then I think there's a vote, and then it's the done deal. As Nate says, that additional paperwork is expected probably at the beginning of the week, and then maybe we even launch this week. And that could all be very possible that we launch within 24 hours of the approval. Talk about max volatility on the week. And people are asking me, who do I follow or what do I look at website wise? James at Bloomberg, Eric at Bloomberg, Nate Garassi. And then the third one would be, fourth one rather, ETF Hearsay. This Twitter account is really good at tweeting out news. There's also Tier 10K, the crypto native news services. Walter Bloomberg is another good one. This was Eric addressing the concern for people that this is all going to be paper Bitcoin. There's going to be nothing backing any of this. It's all going to be nonsense. Look, again, you can think of what you want. I don't care. You're not going to convince me otherwise. We should be able to see all this happening on chain with the custodians. So I don't think it's going to be that big of a deal. It's not going to be that hard to figure it out either. As far as is this priced in or not, James Lavish does a great weekly piece. This week he talked about that. He talked about a bunch of stuff. I'm just going to link it. Recommend everybody read it. He goes through reiterating why institutions haven't really been able to access this and what kind of demand we should expect. And as far as where we're at in the cycle, not so much stock to flow, but that is one model that some people love. It's a data point. Great. Okay. But as far as where we're at in the cycle, got about 100 days until halving, and these colored dots really help visualize that. Historically, this is a much better place to enter the market than the red, orange, yellow, or green post-halving. All that's also still fine as far as expecting price appreciation in and around halving, but cycle-wise, we look great. So the long-term individual should not fret here. We continue to kind of sell off a little bit on this weekly open, which is I kind of like selling off into a news catalyst. I think a lot of people got destroyed last week on that massive volatility spike up and down. And now here, to me, again, it feels like people are getting nervous. I'm like max long. Okay, so that's my bias. But cloud-wise, we still look good. We could bounce at 40 if we break down. I just don't think, if the news is negative, I don't think we're going to stop at 40. I think we're going to go straight to 35. Certainly not an expectation. The bullish side is limited probably to 52, I would imagine. And I imagine it's going to be a wick and it's going to look nasty. And we're going to spend the next 4 to 6 months repairing that. We could easily go from 52 to 34 in this quarter. So get prepared for that mentally and be prepared for a much higher degree of volatility than we've had over the previous month. Weekly cloud, again, we've not really been able to hold above the weekly cloud pre-halving. So that does give me some pause here. I'll put it a different way. If it wasn't for this ETF, I would have already been mainly in cash, mainly out of the market, just waiting for halving. I don't think we hit all-time high on the day or the week. I don't think we go to 62. 52 is possible. 48 is probably most likely. And then we'll see what the chart looks like throughout the week. But I just don't think up until halving, we are going to be able to hold above the weekly cloud. Looking at all of the halvings we've had, the pre-halving, we have never been able to hold above that 618 level of the bear market. So that is right at 48.49. So could this time be different? Sure. Is there one thing that could actually make this different? Yes, and that's an ETF, right? So if you're just trading the technicals, you're probably ready to jump at 48. But if you're trading, flows and news and institutional volume, you're hoping for more. Like I said, as far as Q1 goes, we've generally been, flat, really, historically on seasonality. And January's also been slightly positive. February's actually been the better month. So maybe this does end up being a mix of buy the rumor, sell the news, and then we have this steady bid underneath us that helps us much more in January than in February. Funding, like I said, basically reset. This is Coinalyze. They do a really good job at aggregating all the funding. We can go all the way back to 2021, and you can see how hot funding gets when we really are bullish. So we're not quite there yet, right? That's post-halving stuff, post-halving activity. But I'm actually glad we reset funding before the news. No free rides. Remember that. Open interest, like I said, it's elevated. Sure. It's high. Sure. We're also seeing predominantly CME open interest here. I don't think it's anything to be concerned about. I think this is what you want to see. You want to see open interest rising with price. And a quick note on the option stuff. Looks like the majority of the call strike is at 50K. So another reason there may be maybe a ceiling at 50K. Put call ratio is about even by the looks of it. There's some open interest towards the end of the month. That's pretty significant. Not as much leading up until this week, but there has been a ton of volume on the options that have expiries this week. So there's definitely been heightened interest, let's say, on the volume of options for the event. As far as alts are concerned, again, dominance, I know I'm zoomed out, but dominance has been kind of surging here over the past week as Bitcoin's held its levels with alts kind of melting pretty hard. And total 2 relative to BTC also just melting. Nice little fake out there above resistance, but it does not look pretty for alts across the board in the near term. In the long term, you've got this edge to edge on the USD chart. This is total 3. This looks fine. You're hoping for lower. You're hoping for 300 billion or whatever this is. You're hoping for a support retest. So like I said last week, don't fear the Reaper because that is part of the game. These are the stable prints we got. Again, I'm zoomed out a little bit, so it's harder to see this, but last week, Tether just 3 billion, I think they printed, and USDC printing a bunch as well. So last time we saw printing like that, we saw a mega bump in alts almost immediately. So we're not seeing that here just yet. Something to maybe watch for throughout the week. The question obviously is, where is it going? Is it going into BTC? Is it waiting to bid BTC? What is it doing, right? Is it sitting in yield? Probably not. I'd imagine not. Anyway, let's go worst to best. We got RUNE, which to me looks very head and shoulders toppy, very bearish, losing the yearly pivot, at least trying to. I don't know if it goes this low. I wouldn't short any of this stuff, but I think if it does get this low and you were looking at adding to a position or getting into a position, this is where I would be looking between 230 and 330 based on the measured move there. Even on the daily cloud, this does not look like bullish continuation. Yes, this could hold here. It could break back above the cloud, but to me, you're better off just waiting. Link kind of the same. Link I like 10 to 11. I don't think it gets below 8. That's where the breakout was, but I could see Rationale having bids at all these breakout points for any of these alts. ADAs are very, very much the same. Look, it looks like it's pointing to somewhere in the 40s there. And then there's ETH, which just looks kind of dead, lethargic. It's not outright bearish, but it just doesn't have any momentum. Wasn't able to break out on any of those highs. Again, you've got everybody and their mother selling this thing. So just let the temper tantrum happen. I would just, step aside, right? If you've got a long-term view, keep it. I don't think that's at risk here, but you're in for some bumpiness in the near term. This is the validator exit queue. This is mainly Celsius. So, wait till this goes to 0, see what happens. Maybe the rest of January is just kind of a nothing burger for ETH. Then here's Celsius saying that they're unstaking. They're not going to be selling all of this. They're going to be giving some in-kind distributions. But what are those people going to then do? I don't know. You tell me. So I think Q1's probably not looking so hot for ETH. Here's ETH BTC, which look, it's below the 200, below the cloud. I don't know what else to say. It's continually been bearish. Weekly looks very bearish to me. I do not think 05 will hold. I like lower. You know, I've said it for probably 30 weeks by now. Sol looks okay. It's still holding within a pitchfork, still holding above the daily cloud. This probably gets a clean reset on the cloud in that you get a bearish TK cross. It goes into the cloud, kind of hobbles its way around, and then figures it out around 70. If by February we are below this pitchfork, below the cloud, then there's certainly a much more bearish outlook for Sol. But if Sol can hold the pitchfork, hold somewhere in the cloud, and then reset momentum, probably into Q2, that would be good. I just wouldn't expect anything on alts in the near term. I mean, they've just absolutely kind of toppled over. This was the 8 hour that was holding on most coins throughout Q4. And much like RUNE and Link, Sol is looking the most bearish it's looked since pre-October. Maybe falling wedge, but wouldn't hold your breath on any of that. Nothing to me really screaming bullish. AVAX as well. Just does not look like there's much bidding going on here. What I suspect is happening is most of the quote-unquote smart money took profit and rotated into BTC and is maybe holding up those BTC prices in the moment. One possible thing that's going on here, but AVAX, again, not looking bullish. And then as far as the Grayscale products, GBTC and ETH both closing that discount quite nicely. If GBTC gets approved this week, this will go to 0. And, you know, ETH Classic still has a pretty big discount. So another shout out to that possible trade setup just based on the discount. Some real quick legacy points. Yardini Research has a really great smattering of stuff on liquidity globally. If we just look at the big four, it mostly looks like we're kind of losing liquidity still, right? It looks like the Fed, the turquoise there, continuing to let QT happen. Sure, what's going to happen with BTFP at the end of the quarter? We may see a bump in the Fed balance sheet there. If QT slows down, this will slow down. But really what's most important to me is the reverse repo, right? This is where we are funding the short-term treasuries. We do have some more treasury auctions this week. We have some notes and bonds as well. So add that to your list of fun stuff to pay attention to throughout the entire week. And I really don't have any clue what to expect on that front. But on the dollar front, we are setting ourselves up for a death cross on the dollar, price below cloud. This does not look bullish. Yeah, very similar to ETH. Look, it's ETH BTC, right? This is not a bullish picture. So we're back above the cloud. And this is what we want the DXY to look like going into halving. On this particular chart, reverse repo, high yield bonds, Euro, S&P, and Bitcoin, we want everything up and to the right. So you can see we had some pretty significant tailwinds for us throughout 2023. If these start to reverse collectively, if risk is sold instead of bought, we will see some issues on the Bitcoin side of things early in the year. I'm going to reserve judgment for Q2 and beyond based on what those flows look like for the ETF. I think that may be enough to let us move to the beat of our own drum, but it certainly helps if we have bullish tailwinds for risk broadly. And then this is Apple, and it doesn't look great. It's at the 200-day moving average. It is technically below the cloud. You could probably call a double top on this. They've had a lot of issues with the law in all sorts of ways. The watch, I could go on, but this chart does not look bullish to me. And it could kind of drag down everything with it, depending on how bearish this continues to be. Then lastly, I'll just say they finally passed a budget, and it looks like it's going to be slightly bigger than last year's budget. Most of that going to defense, with some of that also going to non-defense, obviously, some being about half. So look, we're still spending a bunch of money that we don't have, and it's infinity over 21 million. Don't do anything stupid this week. Like, dislike, comment, share, subscribe, and happy trading.